Hey, welcome back, Real Money community. The first thing I want to go over is obviously this M1 Finance portfolio update. And if you check this out, we are positive. This is great because, we've been down for so long. Look at this freaking wonderful dash right here. Nice long recovery. Didn't take too bad though, honestly. Only from March to April. That's really nothing, for how hard of a dip it was. The great thing is that we are in the positive. It's pretty much up. I am getting kind of killed on real estate. That's one thing that's beating the hell out of me right now. And as you can see, my real estate light held up pretty okay relatively. So this is kind of interesting to see because it performed slightly better when times were good, and it also seemed to perform better when we had that crash and the corona stuff going on. So this real estate heavy kind of had a hard time. It did come back pretty harsh recently, so we'll have to wait and see. Overall it's coming back, and we do have some real winners in here. Apollo, Carlisle, but we got some real big losers too. Ladder, a lot of the lodging ones, like a lot of the hotels and stuff, are still really hurting, and we'll have to wait to see how those play out. But the thing is, we're up overall. This is really nice. I've been adding money steadily. I want to say I've been adding $250 a week now to my stocks every single week, which is, hopefully that after a while will add up to quite a bit of money. And if I can be consistent with that, it's gonna, it's gonna keep adding up, which is great. Keep buying those stocks, dollar cost averaging, which is super important. The biggest surprise for me, though, honestly, I just wanted to bring this up to you guys, is if you go into my services section there and we come down, Tesla is just, it's blowing me out of the water. I put friggin' less, I want to say around $500 into Tesla, and for it to come back, I had like 400 and something dollars, almost 2 shares. It says average share price of $298.16, right? Which is, honestly, I was buying it when everyone was shorting it. Everyone was saying that Tesla's not going to do well. And I just couldn't see that. The brand with Tesla is phenomenal. It's done really well. And I had a feeling sooner or later that those Model 3s were going to start turning a profit. They were going to start shipping them out. I'm sure you guys let me know if you do too, but I see them everywhere now. And I'm out of Massachusetts. I see them all the time, all over the road. And it's been quite a ride from even just June this last year when I picked it up. You could see it didn't really do much for a while. And just this year especially, it's just been insane for my portfolio value. And to be up 520% on one thing is kind of it's kind of insane. So I'm very happy with that, which is great because it kind of makes up for my boy here, Sunoco, which I've been collecting as much as I can on that downturn. I was lucky enough to get some shares at $13 a share, which to me is a phenomenal once in a lifetime buy. And I'm just waiting for those nice fat dividends to roll in, and honestly, it's been picking up its pace. It's been making back that loss. At one point, I want to say I was down 40 or 50%. And as Sunoco was going down, I was able to dollar cost average, a phenomenal tool. I really suggest people use that. And I was able to get this to come back. And I want to say my average share price, where's that? Yeah, $27.57. So when I started, my average share price was $33, and that wasn't really that long ago. And I've been able, through dollar cost averaging, to get that down to $27.57, which really isn't too far off where we are right now at $23.47. You're talking $4 difference, and that $4, I'll get that back very quickly in this nice dividend, because I want to say Sunoco is like a 12 to 14% dividend. Usually it bounces around in there lately. Which is, that's huge. That's huge on freaking 12 grand. So that's a massive dividend. Obviously, I hold a lot of this stock. I'm really, I think the fundamentals are there. In the last quarterly earnings, it was a massive loss, or however you want to word it, but it was a loss of inventory value. So it was basically because the value of oil dropped that they lost value. And in reality, they're actually cash flow positive big time because they made more money than they've ever made. I want to say there were 9 cents a share profit on each gallon, 9 cents profit per gallon to like 13 or 14 cents profit per gallon because of the coronavirus and because of oil tanking so much because of what was going on in the Middle East and with the coronavirus demand. Basically, it was able to make them make more per gallon, so they didn't have to sell as many gallons. So even though they lost technically because of the value of the oil went down, so they lost that value, they gained more money and more cash, which to me is important in this kind of business. They were able to get in a better financial standing with their debt. They were able to basically get themselves in a really good position right now and set for the future to have really good gains, which is a big reason I kept picking up shares when it crashed down. And I think another big reason why it recovered so quickly is I think people picked up on that, which is great. So that's one big thing I wanted to go into with the portfolio and just basically talk about a couple of those things. The other thing I want to talk about is I recently started a Roth, which is wonderful. I've been putting money in that too every week, trying to get that built up. Obviously, we'll cap out at $6,000 for the year, but we're already at $4,500, so we're almost there. A few more deposits. I want to break that down for you guys in my Roth. I basically very heavy on Sunoco. I was trying to buy it as much as I could. I want to say that the average share price, the average share price for my Roth is $25.09. So I've been able to get that even lower by $2.60 to my personal account, which is, I think this is a very good buy point. I mean, you're talking we're $1.50 off that. So very, very, very good position to be in with that. And I want to say the other three things for my Roth that I picked up. The other three things I picked up is just an S&P 500 index. Boom. Easy. I don't have to really take care of that, read nothing on it. Just keep putting money in every single week. VNQ, which is a REIT index, same thing. I really don't have to do too much legwork on this. And with VPU, same thing. Just 3 index funds and then my little risky Sunoco bet, which I think is just a really good bet. I think it's going to pay out, phenomenally long term. The other thing that I wanted to bring up is that I recently started the spend account with them, with M1 Finance. And I don't really use the card, so this cash back thing doesn't really affect me. I don't really use it for that. And this 1% interest rate really isn't nothing phenomenal, not super impressive. But for me, what it is a nice little account that's easily accessible to my invest. It helps with my margin account, keeping money. But it's also, for me, it's a just-in-case fund. So basically what I've been doing is $100 a week, every single week. That's been dropping in. Obviously you can see 1, 2, 3 weeks. Plus I got 3 cents in interest. Nothing phenomenal, like I said. But I just wanted to bring that up, that this is basically my emergency fund. I'm hoping to get this up to, somewhere between $5,000 and $10,000. For just in case anything happens, lose a job, whatever. You never know what's going to come, what life's going to throw at you. So it's just important to have a fund for this. And this I want to add to. This is in addition to what's in my bank accounts. This is just going to be a dedicated fund that is just for this purpose, just to basically build up my reserves. So the other thing we should really go into is obviously my borrow account. So in my borrow account, the one thing I did want to bring up is I did increase my margin slightly. I want to say I was in the 9 or 10 range, and now we're in the 11.3 range. And I did that because I just don't see a drop like we had. I just don't see that happening again in the near future. And I could definitely see a small drop or even a pullback at these valuations. I could definitely see that happening. I just don't see, for me to hit a maintenance call, I had to drop 64% of my portfolio, which is, just under $29,000. So I just don't see $29,000 shedding off my account at this point. So I was comfortable with taking a little more of that borrow on. And obviously, I've been paying it back too. I've been paying off a little bit. So a lot of the time what I'll do is I'll borrow money because my transfer won't be in time, or I see like a phenomenal drop in a stock price. And what I'll do is I'll buy that with this borrow money. I'll pull the money, move it to the account, make the buy, and then I'll instantly transfer that money. So what it does is it allows me to get that buy-in for something I might not have expected that day, like say a stock that I follow or that I'm big into drops a big percentage and I know that it's going to turn back around. I'll try to hop in that day before that turns around, before I miss that opportunity. So a lot of the time I'll use my margin for that and I'll pay it back, which is really helpful. So it's just a really good tool basically. This month we're down right now, or I want to say. Not a lot, but just a little bit. But for this quarter, since the drop, we're up massive. I'm up 32% from where I was at. That's, $10,200. That's huge, and I've added net cash flow of $3,553 to this account. Plus, like I said, I've been going heavy on that Roth. So the Roth's been kind of eating up the funds right now too, from keeping it from going in my main portfolio. But I'm looking forward to the future with that, and I want to look towards those tax benefits later in life, and I really want to make sure I ensure myself a tax-free income. I think that's a really phenomenal and useful tool. Yeah, last year, it's been almost a little over a year, right? Because we're at June 24th, 2019. So in that time of 1 year, we went from $16,600 in this portfolio to where we stand today, just a little over a year later in July, we're at almost $45,000. So I mean, that's a $30,000 gain, and I mean, I don't make a phenomenal income. I don't make six figures, So if I can pull that off, basically, I work multiple jobs. I save every dollar I can. I make cuts everywhere I can, and I put the money away every single week. I make sure, no matter what is going on in my life, that I always pay myself first. I make sure, no matter how many bills, no matter what's going on, I make sure that money is in this account every single week. And every time that I work extra or I get an extra check I didn't expect, I put that into here or the Roth as well. So these are super important things. And obviously, it's great to see this green. It's great to see all this going on. Another phenomenal thing is tech. Tech has been really surprising me. I want to say it never really went down much. We had that dip like we did everywhere, but it recovered very quickly and it just kept rising. I mean, look at these numbers, We're up huge on all the tech stocks right now, which is just great. I'm happy to see that. Nvidia, kind of crazy, blows my mind. Wish I put a little more in there, obviously, right? But, it is what it is. So it's kind of great. I'm happy to see these numbers. I'm happy to see that the account is coming back. It was very tough when this happened. It was tough to see my portfolio go from, where were we here? We were almost $40,000 before the drop of this coronavirus stuff. So 40,000 all the way down to, I hit 26,000. So that's a $14,000 drop like that in a blink of an eye. Literally, I want to say a month. So that's kind of an insane thing to see, where I'm a young investor, millennial investor, so I've never really gotten a chance to see something like that before. And I was kind of excited to see these drops and to get in on these opportunities, on all these buys. I was trying to buy as much as I could all the way down. And I was it was a weird experience for me, because it was hard to see that, and it was stressful to see your money disappearing. But at the same time, I was excited because I knew when it comes back, if I was able to hold fast and buy all these opportunities, that we would see this. Whether it was going to be here, I'm not saying, I'm a genius and I knew it was going to be immediate. No, but I knew that sooner or later we would have this shaped recovery. Whether it was a year from now, 2 years from now, or whether like this, so quick, It's an amazing thing to know that and to have that financial education, because what it did was it allowed me to buy here when most people were frightened and were probably still selling and were worried we were going down to here somewhere, which would have been not great, But again, great experience. And, I missed a 2008 crash. I wasn't really involved too much in the market there. So it was nice to get a chance to be involved in all this. So, if there's anything else you guys want to know or anything you want me to break down with my my account. And, I love answering those questions. I love having this great community. And I'll make sure to talk to you guys next time. Don't forget to like these videos and don't forget to subscribe. Show some love to the channel. All right. Talk to you later.